That is just a wild thought that that Bitcoin would eventually saturate the debt market.
Like, it's not a sprint. They're not trying to win any one cycle. They're trying to win the long game. And you've seen their very regulation-first approach, constantly taking their customers and their regulators into account when they're thinking about how to build their business, not leaning into every single narrative.
Do you think it's possible for companies to go public and also launch tokens? Ultimately, how do you think these two paths play out?
Welcome back to The Roll Up. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy a quick word from some of our awesome partners who make this show possible. The intersection of AI and crypto is moving fast, and soon an agent will be managing your on-chain transactions for you. But without guardrails, it's a disaster waiting to happen. Newton locks agents to your intent with cryptographic proofs and real penalties if they slip. Learn more at Magic Newton on X.
We've got a real, not theoretical, we've got a real Haseeb with us.
Coming up next, here we go. We had some fun questions for him. I think this should be a good segment. I don't really know how he's going to respond to these, so let's get him up. These should be interesting. Haseeb's in the building.
Welcome to the show.
Thanks for having me.
Where are you calling from today, man?
I'm at home here on the West Coast, but I'm headed to London tonight.
Sweet, cool. Man. Always on the move. Rob and I were at a research day today in New York for a couple hours, watched some good talks.
Nice.
On the infra side, there's a bunch of just technical people there. It's pretty good.
Very good. Very good.
It's a pleasure to have you on. We we've only been doing a couple of these shows, and I think you've got a unique insight and a unique perspective on the industry. So I'm really, really stoked to get into it. And you want to kick us off here with the first question for Haseeb?
Yeah, man. I mean, so we were just talking about Nakamoto raising 710 million, Jack Mallers buying a ton of Bitcoin, and obviously Michael Saylor. And so our first spicy question for you is, why would you run Dragonfly and do all the work of doing VC and all of these due diligence and all this stuff when you could just collect fees on Bitcoin and run like a Bitcoin strategy company?
Yeah, I'll tell you, every cycle, it looks like there's somebody who's making money way easier than you are. And it's always temporarily true. And in the long run, it's not true. Is that, over a long enough period of time, I mean, the thing about venture is that venture, more or less, it always works in that there are always founders building something new that is worthy of investment and that is going to do well. It's not necessarily in the same sector all the time, but it's something that always works because there's always need for capital. There's always need for capital markets. But whether it's launching an NFT collection or whether it's being the new meme coin platform or whether it's doing these MicroStrategy type knockoffs, like it's going to work until it doesn't. Where the point at which these things start trading at NAV or at a discount to NAV, obviously this playbook is going to stop working, and these things can't work forever, right? People will issue enough debt, and they will keep doing this over and over and over again until all these things end up compressing down to NAV, except for maybe one. Right? It may well be that MicroStrategy is the only one that gets away with it, but like we saw this before with GBTC. It is not in principle all that different of a mechanism. As long as these things trade at a premium, people will still do it until they push the premium down below 1.
Now, quick question for you on this one, and I think MicroStrategy and 21 Capital and Nakamoto, these sort of operate a little bit differently. So I think what we were all seeing on GBTC was the opportunity for redemptions, right? And that was sort of what compressed the discount or the premium, because then you could freely go in and out. When you're looking at something like a 21 Capital and you see the priority around Bitcoin per share, suppose they do implement something like redemptions. Do you think that is a positive or negative mechanism for the survival of this company long term?
Look, people obviously will not implement redemptions, and for something, for something like GBTC, obviously the marginal buyer of GBTC could not redeem, and that was part of the mechanism behind the trust. Is that you can create, but there's no actual mechanism to redeem. This it's a one-way street where Bitcoin goes in and no Bitcoin comes out unless there's a liquidation, right? If they get margin called and they have to sell the assets in order to pay their debts, that is the only situation in which Bitcoin exits that vehicle. So now that being said, I'm not implying that this thing is going to do what GBTC did. It's a very different object, and it acquires capital in a very different kind of way than the way that GBTC does, right? GBTC did not issue debt. It's financial engineering of a very different kind, and clearly the kind of leverage that Michael Saylor is able to get, and that all these vehicles are able to get, is better than the kind of leverage you could get on your own, going on Binance and going levered long on a perp. Right, you're going to get blown up really fast if you try to get levered on Bitcoin yourself. But the corporate debt market just operates very differently than the kind of short-term leverage you might get in a normal crypto exchange. So that's why these things work the way they work, is that there's, in a way, a sort of leverage arbitrage that's taking place here. But again, the fundamental laws of economic gravity have not been suspended. As long as these things trade above NAV, people will keep doing this over and over again until eventually it stops. Like, you will eventually saturate the debt market, right? Period. Or you'll just buy so much Bitcoin that there's no one left to sell.
That is just a wild thought that that Bitcoin would eventually saturate the debt market. Like coming from where we've came from, that is just wow. That's something.
But at a certain point, you hit a wall, right? Depends on you don't know which wall you're going to hit first, but you're going to hit one of the walls.
Yeah. Well, Brian Armstrong said everyone and their mother will be buying Bitcoin. They're going to be buying it in their 401k. They're going to have exposure. Coinbase just joined the S&P 500. What do you think Brian Armstrong understands about building in crypto that most founders still don't understand?
I mean, it's exactly what I just said, which is building for the long term. Coinbase now has been around, 12 years? This is a marathon to them. This is not a sprint. They're not trying to win any one cycle. They're trying to win the long game. And you've seen their very regulation-first approach, constantly taking their customers and their regulators into account when they're thinking about how to build their business, not leaning into every single narrative, but instead thinking about the long arc of, okay, how do we become the venue for ETFs? How do we partner with BlackRock and all these wealth managers and make this the gateway for regulated crypto within the US? That has been their strategy. Now they're, $60 billion business? Absolutely incredible outcome for everybody who's been building this thing. And the thing that I think many people in crypto could take away from Coinbase, people like to dunk on Coinbase. Obviously, they just had a black eye today with the announcement of this big hack and ransom that they were responding to this morning, which I don't know if you guys have already spoken about it. But look, they've had their shares of stumbles. Happens all the time. But at the end of the day, the thing that everybody knows about Coinbase is that their heart is in the right place. And they're constantly pushing the vanguard for the industry for the long term, whether it was fighting the SEC, whether it was pushing BlackRock and becoming the clearing venue for all these ETFs, like that, you can only really get that from being extremely long term. And there's so many teams in crypto that don't really have this DNA, and Coinbase does, and it's just so rare to see.
Yeah, I've just been bull posting Coinbase on here as my one and only stock holding, which is pretty degen of me.
Very well.
That's just how I am. So,
nice.
On the note of these kind of institutional consumer-facing applications, Robinhood's been doing a lot of teasing, and they actually just acquired WonderFi. So it kind of begs the question for me about distribution and the way this opinionated infra stacks and this kind of verticalization of owning the stack is going to work and play out, in your opinion. So from your perspective, is it easier for Robinhood to build Solana or Solana to build Robinhood? Who's going to eat whose lunch first in a hypothetical like this?
That's an interesting way to frame the question. Look, the reality is that it's really hard for both of them to build each other, right? They're just completely different animals. Building a centralized exchange, the thing that you have to respect when you look at Coinbase, right? Coinbase is not necessarily the best product. It's not necessarily the fastest exchange. That people were clowning on them they recently launched 4-hour candles, I think. And people were like,
that was hilarious.
You didn't have 4-hour candles? You're a 13-year-old company with an exchange and you don't have 4-hour candles? But so the reality, look, it's not necessarily the best product, but it's the most trusted product. And that is the thing that you're ultimately competing on when you're building an exchange, is that it's not about having more features than the next guy. It's about having the most robust overall platform. And in the same way, you can probably get a Kraken or a Coinbase to go build an L1, but will the L1 be trusted? Will it be neutral? Will it be perceived as being the same kind of bazaar that everybody can bring their wares to and compete on an equal playing field? Not necessarily, right? That's why you see, Coinbase has their L2 base. Obviously, it's been very successful, but it's nowhere near the scale of Solana or an Ethereum because of the fact that it's not neutral, right? It's a corporate L2. I think these are great. Kraken has its own with Inc, but that's a far cry from what we're trying to build with this globally neutral substrate, which is the layer ones themselves, right? That's why Base and Inc are built on Ethereum, right? They settle to another chain that actually is credibly neutral. But if it was built by a corporation, of course it wouldn't be. And that's not the role they're trying to play.
Yeah. Yeah, absolutely. Ultimately, it's different strokes for different folks. I think it's beneficial for the industry as a whole that we get this bifurcation. Everyone is able to fit a different gap in the market. And that's why these guys are valued what they are. Haseeb, one thing that we've been talking about going back and forth a little bit as we're seeing more companies launch in the public markets, 𝗟𝗟𝗄 with their IPO is due to come out tomorrow on the NASDAQ. We're kind of going back and forth and on the fence. Do we think that there's going to be tokens and equities available for companies? Will companies that go public also have tokens? Or is this a one-way street? What is going to determine what path these companies take, whether to go the equity path, the public path, or they go the token path? Do you think it's possible for companies to go public and also launch tokens? Ultimately, how do you think these two paths play out?
So look, that's ultimately a regulatory question. And that regulatory question is going to be settled by this SEC or CFTC, probably come the market structure bill that's currently working its way through Congress. So you can imagine a world where we have well-defined definitions of what is a security and what is a commodity. And if you do, there's nothing that stops a company that has stock from issuing a token. As long as that token falls within the legal bounds. But one thing is very clear. If you're a public company, you're not just going to take a guess. You're not going to be like, hey, I think it's probably fine to launch this thing. Because if you get delisted from the NASDAQ or you get slapped down by the SEC and you say, hey, you can no longer be a public company, that is just such an absolute disaster. Nobody's going to take that risk, especially when, in such ebullient capital markets that are already rewarding you and giving you liquidity, right? It's possible that someday that you see Base launch a layer 2 token. It's possible someday that you see, Uniswap Labs go public, even while Uniswap protocol is itself a decentralized protocol. None of these things are incompatible with each other. Same thing with Etherealize, right? Etherealize is this company that's built on top of Ethereum. They could potentially go public even when Ethereum itself has of course, a decentralized token. So the thing that we ultimately need for this is regulatory clarity. But we've already seen, MicroStrategy is basically a big pile of Bitcoin that's public on the NASDAQ. We've yet to see other companies do this for other assets. I guess technically somebody's doing it with Trump token, but I guess meme coins are definitely not securities, so I guess that's technically kosher. But getting this kind of full stack where you have an actual token, then of course the question, which many people have raised about Uniswap, which is, okay, how do the fees break down? Right? In crypto, very often people kind of just close their eyes and buy the thing based on the mimetic value. So it's like, oh, this token has this name on it, therefore I'll buy it. In the stock market, that's not how it works, right? So if you see that, well, Coinbase is going to give half the revenues to this token and half the revenues to the stock, well, the stock is going to plummet by half in like 10 minutes. In crypto, we don't necessarily see that level of market efficiency, but it will get reflected on the other side of the ledger if you see a company have both a stock and token.
And vice versa, right? You have Uniswap that launches or goes public, and all of a sudden they say, look, we're going to be directing our revenue, right? Not to the token, but we're going to be directing it to the stakeholders and pay a dividend. There, you would anticipate that their token would drop to half value, and that value would go to the stock in the form of that dividend. I have a quick follow-up here, and then we'll move on to our next one, which is that if you were speaking to Congress and you were advising Congress on this market structure bill, what would you say are the 2 to 3 things to keep in mind if Congress is working this through and they're writing the laws? What should they include in the market structure bill so that we recognize both the public markets and the tokenized markets and have a market structure that works for both?
Yeah. Candidly, I think actually the market structure bill is pretty good. I think it's a big improvement over FIT 21.
Could you break it down for us into the main components here?
Oh, I'm not going to be able to do a good job of that. So there's they originally had this concept of a decentralization test. They've now replaced it with a maturity test. There are a bunch of thresholds that are in there now. So obviously they divide up what the SEC and the CFTC are responsible for. There's a notion of graduating into becoming a mature blockchain. Before you're a mature blockchain, there are certain limitations on what you can do, what you can sell, the sort of ownership thresholds, and you have a certain amount of time. I think those numbers are still being baked as the bill itself is being debated about when a blockchain, quote unquote, matures. And then once it matures, it gets treated more like a commodity. And part of maturing is that, okay, you're decentralized, you don't have too much centralized ownership or too much collective ownership. I think one of the big problems right now with the bill is there's a lot of there's a lot of focus on ownership thresholds. So there's this idea like, oh, if you own more than 1% of the token or more than 10% of the token, then more than 20% of the token, you're at this versus this versus this. And the reality is that crypto is a global market, right? And so, if you say that, well, somebody who owns 10% of the token is not allowed to do X, how is that going to be policed practically? Right. So many of the people who are participants in these networks are not in the US. They're not subject to US jurisdiction. So some Chinese guy owns 10% of a token and he's like dumping it on day one. Somebody in, let's say there's somebody's on Hyperliquid, somebody's on Binance. How exactly is the US going to regulate these laws getting enforced on these other domains? So I think there's a little bit of a kind of Pollyannishness about this bill in certain parts, where it assumes that there is some sort of eye of Sauron that can look over what's happening in all of these crypto markets, which is just not practical, right? Especially when a lot of these things are trading on DEXs. So that I think is one of the biggest weaknesses of the bill. But overall, I think the bill is actually a real, you can tell there's been a lot more sophistication in Congress about the real problems in the digital asset industry. Now, all that being said, this is the version of the bill that they got after talking to a lot of insiders. Right. After talking to the trade organizations and the exchanges and the VCs and all the other people who are making their voices known on the Hill, it's yet to get chopped up and kind of, compromised. And it's only once that happens that we're going to actually get a glimpse of what the real bill is going to look like. So this is the best the bill is ever going to be. It's only getting worse from here. And so I think you can sort of reserve your judgment until you see the thing that's actually going to be up for vote. That's the time when it's, you want to start making noises and really calling out what needs to be improved in the bill. But right now, honestly, if this thing as it exists today got passed, I think it's a really big improvement for the status quo and significantly better than FIT21.
Yeah. I mean, we've been waiting for this for so long, right? Just like some clarity. That was the big thing about Gensler's campaign the last 6 years or whatever it's been, is that teams just had no idea what to do, like what they could or couldn't do. It was just kind of like shooting in the dark. So something like this provides a bit more of a framework for, do's, don'ts, and best practices. And I think it's going to just add to the acceleration of institutional adoption. On the kind of opposite side of this realm, we've got very interesting dynamic happening on chain right now with Hyperliquid. Hyperliquid's open interest has bumped up to, I think, over 6 bill. I think recently hit 6.7 bill. My question to you, Haseeb, is if you're CZ, sitting on your billions and your 10 million Twitter followers, you're watching Hyperliquid hit $6, $7, $8 billion in open interest, what would you do about it?
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yield on institutional-grade liquid staking with 𝗵𝗶𝗶. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
It's a good question. You have to assume that all the centralized exchanges are doing everything they can right now to fight back against Hyperliquid, because in absolute terms, Hyperliquid is still pretty small on the global stage, right? If you look at the biggest exchange in the world, Hyperliquid is still, I think they're in the top 10, but they're not that far in the top 10. So the answer is probably a combination of multiple things. One, my guess is that there's a lot of conversations happening behind closed doors to regulators about Hyperliquid, especially now that Hyperliquid is going to end up in the news more and more. Not just as, oh, it's a big exchange, but also it's the natural place to go because it's totally decentralized for market manipulation, right? For sending hacked funds. All the stuff that people are whispering about, oh, North Korea was preparing to use Hyperliquid. The bigger Hyperliquid gets, the more this stuff is going to happen. And that's naturally going to draw a lot more attention and ire towards Hyperliquid compared to what it's been standing historically. When you're small, you can get away with being like, we're kind of just doing what we're doing. The same thing was true with Tornado. Tornado was more or less operating underneath most people's attention until North Korea noticed. And after the Ronin hack, Tornado Cash all of a sudden became this very central story for many people's imaginations when previously they never heard of it. I'd expect you'll probably start to see regulators around the world start to take notice of Hyperliquid. Now, that being said, Hyperliquid, their job in order to get past this is to decentralize aggressively. And, this is one of the most common criticisms I've seen of Hyperliquid is that, their decentralization is obviously incomplete. The team is still very, very actively iterating and developing stuff. And you need that in order to be, at the end of the day, Hyperliquid's still a startup. And they have a lot of work to do to compete with centralized exchanges on all of their features and all the dimensions on which they should. The other thing, of course, that you might be worried about for Hyperliquid is that Coinbase is making a lot of progress on getting perps approved by the CFTC for the US. If you start to see perps in the US, that is a lot of the demand for Hyperliquid is basically venues, countries where they don't have access to trading on perps, right? You can't get on Binance, you can't get on Bybit if you're a US citizen, but you can trade on Hyperliquid. So this kind of regulatory arbitrage may go away, not because of regulation against Hyperliquid, but the opposite of the regulation opening up to US customers. So now that being said, again, one of Hyperliquid's benefits is the fact that it has very good liquidity and it has relatively low fees. If you see perps launched by Coinbase in the US, I guarantee you it's going to be a high fee product. That's kind of Coinbase's MO is that they're able to demand very, very high fees relative to most of their other competitors. So that may be the saving grace for Hyperliquid, but the game is just starting, right? Now Hyperliquid is a player, and once you're a player, all the weapons come out. So I think they're a very strong team. They've executed super well, but nobody here has the mandate of heaven. You have to fight every single day in the exchange market because it's extremely competitive.
Yeah, I appreciate that. It seems like Coinbase may be a bit more of a potential threat than Binance and the other exchanges. But as you said, I'm sure there's a lot of things happening behind closed doors. Competition's fierce, especially with market makers, with the fee generation from these perps exchanges, from the token performance. Binance hasn't listed Hype. Binance hasn't listed Fartcoin. Hyperliquid just listed Fartcoin. None of these centralized exchanges will list Hype, except for KuCoin and a couple others. So very interesting times there on Hyperliquid. Last one for you, Haseeb. I know you spent quite a bit of time with Balaji back in the day doing kind of like mentorship stuff and working together. What was one important thing that you learned from him, which you still think about today?
One important thing that I learned from him. Honestly, one of the most pivotal pieces of advice that he gave me that led to me building what I'm building today at Dragonfly was, at the time before I came into Dragonfly, I was really uncertain what I wanted to do. I just left another fund that was the fund run by Naval called Metastable Capital. And I was a free agent. I was looking around trying to see, hey, should I join something? Should I start something? I wasn't really sure. And I really felt like maybe I should join one of these bigger platforms like Polychain or A16Z. This was way back in the day. So they were not nearly as big as they are today. And the thing that Balaji told me was that the number one thing you should optimize for is agency. Go to the place, do the thing that's going to give you the most agency, such that you can actually make the decision yourself of whether or not to write the check, of deciding how to build the brand your own. And it may be hard. When we first started Dragonfly, we were nobodies. Actually, nobody knew who the hell we were. I remember the first deal I ever did was the seed round of Matter Labs, which is the company behind zk. And that seed round was a very competitive round. And people only knew me because I'd written some blog posts. I was kind of one of these guys who are just sort of mouthing off on Twitter, writing think pieces. And at that time, literally when I got on a call with Alex, the founder of Matter Labs, he was like, I've never heard of Dragonfly. I don't know who the hell you guys are, but I saw your post on Twitter. I thought you're pretty smart. Here's a little, here's $100K for you guys. And that was our first ever deal. So going on that journey of building Dragonfly into what it is today, I wouldn't be here doing what I am doing now if it wasn't for that advice from Balaji. And it's a piece of advice I reflect to all the young people who ask me for advice on what they should do in their career, which is optimize for agency. Whoever's going to give you the most responsibility, go there. Doesn't matter how much money it is, doesn't matter how much prestige it is. Like ultimately, that's the best way to bet on yourself.
And
Amazing.
learn.
Yeah, exactly. And fuck up and make mistakes and then learn from them and take
100%,
risks.
100%.
Haseeb, thanks for coming on, man. Always a pleasure to have you on. Safe travels to London. And
Thanks for having me.
hope you enjoyed the new segment.
Ciao.
Thanks, Haseeb.